Okay, I think we're live, right? Can you guys hear me nice and clearly? Good morning. It's 9:07 a.m. New York time. Top of the morning to all of you, and good evening and good afternoon. Good night for some of you that are maybe on the other side of the globe. Okay, so let's see. Do we have good sound? We got a bunch of people in here. Spend a minute or two just to make sure that you guys can hear me nice and clearly. Have I have a fresh cup of Starbucks 2 times the caffeine coffee that I made in the Keurig. So hopefully this will give me the adequate boost that I need for this morning. So, okay. 1 p.m. in London. What's going on? Okay, so what's going on? Sweet Canary. All right, you're a frequent here. Crypto Ash, good morning. Daniela Espinon, what's going on? J.E., Michael, Dan, Danielle, Daniel, whichever one it is. I can't see from your icon. Rye, Isaac, K, Crypto Cord, Isaac, Aruno, Matt, how's it going? Boy, all right. George Crypto, what's going on, buddy? Rye Els, Henry King, cool. Okay, guys. So everything works as far as the audio goes. Good morning. We're going to talk about a few things in this, and yeah, I just want to welcome those of you that are new to the platform. Myself and my partner Josh Rager. Just want to welcome you to the Blockroots YouTube. You know, our purpose, as we've stated many times, is to offer a non-sensational approach or a non-sensational crypto channel in YouTube or on YouTube, because we think that YouTube is just littered with detritus in terms of crypto content. It's a lot of marketers and, you know, silly faces put on thumbnails to get your attention, and clickbait, and people that have no idea what the hell they're doing. So hopefully we can provide a little bit of a signal amongst that noise. Okay, if you guys can go ahead and hit the like button. I hate to say that, but you know, one of the ways in which we can continue to do this in a, I don't know, I guess in the best manner possible is if we are prioritized by the all-powerful YouTube algorithm. And what that means is they want to put on whatever people want to watch, and the more likes that we get, the more that we can be front and center and give you this, give you these, you know, these solid mornings with myself. And yeah, so if you guys can go ahead and hit that like button, that'd be cool. So you could tell that I'm so not the YouTube kind of go ahead and hit that like button kind of person, because I don't have that ridiculous spiel. So can you just hit the damn like button? Put it that way. Okay, D Ross, man, you're gonna win another $100. So I'm actually gonna, I have in this video, before we give away $100, just to say, the last videos, it was just completely arbitrary. It was like, I figured I'd figure out by the end what my trivia question would be, and then I would get to the end and think, shit, I have no idea what I'm gonna ask. You know, we'll keep it. Last time I think I asked what the name of my favorite horse is, and for those of you that are new to the platform, my name is Ryan. Okay, I am a horse person. Me and my wife, we have a bunch of horses, and her favorite is Journey. Her favorites, I'd say, are Journey and Simba, but my favorite is Clark. So Cantering Clark, that is the name of, well, Clark is the name of the horse, right? So Cantering Clark is just the name that I named my company a while back, a couple years back. This was before I had started, or this is before Josh and myself have gotten together and created Blockroots. So yeah, in the future, when you see at the Kentucky Derby, when you see some really rich dude drinking on the sidelines, well, actually I don't drink, so you know, drinking a soda on the sidelines, you see Cantering Clark racing for the Triple Crown, which would actually be at the Belmont in that case, which is closer to me. You know who that you know who owns that horse. And by all means, 10 years from now, when I am retired, and well, I could retire now, but when I am that's a stupid word, retirement. Never want to retire. But when you see a racehorse named Cantering Clark, okay, it won't be Clark because he is not racing whatsoever. But you find out where that owner is, and you come hang out with me in the owner's box, and you could just say, you know, password coffee and crypto. Okay, cool. All jokes aside, So when these coffee and crypto streams, we touch up a little bit on current events, a little bit on news, take your requests as far as pairs go, and hopefully try to leave you with some nugget of wisdom. Don't want to overcomplicate anything on these streams. Some people have said that the things that I do, or rather the methods in which I use, are a little bit over their head. I completely understand that. When you look at a TPO chart, when you look at these volumetric based tools, whether it's learning about the footprint or using some more volatility or volume based periodicity, it's very new to people because the first thing that they see when they come to crypto Twitter is a space that's primarily dominated by very rudimentary approaches, and don't mistake that for these not being effective approaches whatsoever, because a lot of the best traders that I've come to know, and me having been a trader now for 14 years, a lot of the best traders that I've observed have been in crypto Twitter. I think there's a level of tenacity and hunger, especially amongst the younger crowd. Myself, I've been at this game for a really long time now. I'm 35 now. But there is definitely something to be said for the talent pool that is here. And it does help that crypto moves so fast that you get exposed to cycles that normally would take you decade to see in traditional markets, even though we've seen traditional markets ramp up as of recently. So those tools that I use, the things that I sometimes go over in these streams that I don't get too much into because I keep that for the Blockroots group. I keep that for our educational platform, which has a ton of information on all this stuff. Those are not actually that difficult to use. So a lot of anything that anything that you learn for the first time, that is obviously not immediately a walk in the park or immediately intuitive, it's going to present itself with a level of difficulty that at some points or at some times might be, let's just say, intimidating to someone just starting off. But the way that I trade, my entries and exits for trades, my entry criteria primarily, it involves me answering like 3 to 4 questions, and that's really it. And the footprint, what it does is substantiates the case for, or rather it gives me the sign that the evidence is there that I need to really get totally behind a trade. But like I said previously, those footprint charts that I share, if I get to that point of checking the footprint and seeing if we have that pocket of volume or that aggressiveness or that imbalance, and if I see that it's not jumping out at me, I'm 90% of the time still going to take the trade because all the other criteria is lined up. And a lot of the times the market is maybe not necessarily moving on just trap traders or crowded areas being pocketed and reversing. So my point is that that stuff is it's very simple to understand when you get into it. I hope that it's not overly intimidating. But what we're going to do in these live streams is try to, from time to time, introduce a concept. And in this live stream, I'm going to introduce something that is I'm not introducing it, honestly. It's something that is available on exchanges, and I think that it's just not taken advantage of. And in my experience, and for those that have traded traditional markets, myself having traded equity derivatives and then crude oil, if you come from traditional markets and you operate on traditional market platforms, whether you're on a retail-based client tool such as like TD Ameritrade, or you're using something that for equities it's a little bit more high tech, maybe like Lightspeed, or if you're trading futures and you're using something like Sierra Charts or NinjaTrader or Trading Technologies, those platforms have a ridiculous amount of features that are even available to retail, right? And you come to crypto and the exchange features are just like, it's almost like as if you wonder. And we've been working with Phemex because you know that I'm partnered with them. So when I talk about Phemex, obviously I do have a vested interest in Phemex. We are partners with them directly, but we're always talking with them to improve the offerings that are available to traders as far as tool sets go. And it does make sense if you think about it, though, why certain exchanges wouldn't want to have these, or rather want to make these tools available to you, because it's just one more tool that can help you keep money. So what I'm going to be talking about at the end of this video, it's something that's available now. It's pretty ubiquitous amongst all exchanges, and I think that you can make good use of it in certain conditions. Because, if you backtest a lot of things that might be seen as very useful, you could find that depending on one particular person's strategy or another, they'll actually reduce your overall upside, and maybe they'll reduce your downside, but they will reduce your upside as well. Okay, sort of like the concept of stops. It's one thing for us to be, say, hey, we're we're the primary educational group, and do as I say, not as I do kind of thing, because we'll say things like you should always use stops. Yes, right. Myself, though, I don't always have a stop on right away. A lot of the trades I will actually manually exit. And that's just the truth. A lot of the sort of, excuse me, congested again. A lot of the truisms and best practices you hear, those are just that. They're best practices. So what you learn as you become a more experienced trader, just like when you do anything, is there's a lot of shortcuts. There's a lot of stuff that you end up saying, that is important, but this is maybe at this point a little bit more important. Maybe I could lay off of this a little bit. The concept of betting, we're risking 1% each trade. If you're going to do that, you're not going to grow, right? You are going to grow, but it's going to be in a very, I'd say it's going to be a lot more linear than potentially growing in a more convex manner, or an exponential manner in that case. Not to convey that possibility to anybody and make you think that you're going to grow exponentially, but if you're just sort of applying this cookie cutter 1% risk per trade approach, it's really showing that maybe you don't have anything completely developed yet where you could say, oh, this is a good hand, I'm going to put a lot behind it, which is really what you're doing. That's why bet sizing is so important. If you have, and I've said before, if you don't have a high hit rate setup, if you don't have something that is tested for a really long time and shows to be successful, you haven't earned the right to take a risk, right? So you haven't earned the right to throw a lot of money behind something. So first you have to have sort of that statistical backing. So now that we've gotten that out of the way, okay, so first things I just want to touch on, I talked about these in the newsletter. PayPal just gave 346 million people a new way to buy Bitcoin. Not going to go into this too much. You're going to get people on, always there's this sort of dichotomy between everything. Oh, is this good? Is it bad? I don't know. You tell me. More Bitcoin. The word Bitcoin is put in front of more faces at this point. It's made available to people in a little bit more of an easy fashion than the more, I guess, unknown methods in which they could currently use. Not everyone's comfortable going onto a cryptocurrency exchange. A lot of people know how to use PayPal. So a diehard crypto person would argue like, hey, not your keys, not your coins, so you don't get access to your keys. You can't withdraw the cryptocurrency to a private wallet. That's fine, but listen, that is more along the way that Robinhood operates. But if you remember, actually Square operated in the same manner, and now Square actually allows you to take control of your crypto assets. So this could be, again, a very walk, then crawl, then run sort of approach, and this is a pretty drastic shift compared to the previous stance. So this is good. Everything is good when you have anyone come into crypto and take supply off the market. That is great. That's great in any asset. It's especially great in an asset that has a really low float. So assets that have a low supply, right? Take crypto off the market, decrease the supply, you create that more reflexive impact for future price movements. Okay, so PayPal, good news. More recently, let's see, JP Morgan's news, complete shift on cryptocurrency. If you just look at, there's a few pages that I saved. If you guys are interested in those, I'll share them. I sent them out in the newsletter. This is a pretty drastic shift considering Jamie Dimon not too long ago was saying that he would fire any trader in 2017 who was interested in cryptocurrency. Said that it was completely stupid, pretty much made it seem like it was the most asinine thing to get into. And now they're shifting and they're saying, oh, it's it obviously is a competitor with gold as a store of value. It has more utility. As a store of value, you could store a lot more value on not just a store of value like a haven, like a safe haven asset, but as a store of value, right? You could take $1 billion in cryptocurrency around a lot easier than you could take $1 billion in gold. Okay, so it's a lot more transferable in that manner. It is the way that everything goes, right? It's like denying technology it's just an ass backwards way of approaching anything. If you see superior technology, it's not always the case that the first one or the what might be on paper the most superior one wins out, right? You see in a lot of businesses that might be the most superior, they don't end up going on to be the ones that are noticed the most and gain all the attention. But still, there is an obvious benefit to cryptocurrency. So for them to initially have such a hard way of looking at it is kind of ridiculous, but it makes sense. It's competition to them. So they said that Bitcoin and gold, they're obviously, they both have benefits. Bitcoin can, or rather should, gain more market share, yada yada yada. What they were saying was, oh, it's millennials, which is one of the arguments I always put forth, where I said, hey, millennials, baby boomers pass on, they pass on their inheritance, or they pass on their wealth to the millennials. Are their children going to, put money into gold, or are they going to change it up and put money into this new sort of narrative driven, more technological store of value? Well, people go the technology route. So even through that alone, you're going to see this accrue value. And I said, hey, even if it's like linear adoption, then it's going to go up over time. It's just a matter of how much it goes up in how long a period of time. Because at that point, you're thinking, the time value of money, opportunity cost, right? So risk adjusted returns at that point. If you're taking this much risk only to gain 100% over the next 10 years, it's not that attractive. Okay, but at this point, they're changing their stance on it. I don't think that they're changing their stance because of millennials, right? I think that that's their way of saying, oh, I think that's their way of deferring the fact that they didn't have the foresight to see how attractive this would be. What they're probably noticing is what everyone else is noticing, which is just the CME contracts, for example, are number 2 now by open interest. So we have clear institutional demand, right? This might be higher frequency. It's front month, so there's more turnover. It's not exactly like they're holding, unless we're seeing this change. I haven't looked out on the term structure to see how many contracts are being held or what the volume or the open interest is, but it's still very much focused on the front month. But you have a lot more longer term investors coming into the space, and all this is good. It's a crawl, then a trot, then a canter, and then a gallop. Okay, so cool. Everyone is here. So we broke down some of the news, and in the Phemex trading competition right now, I made a mistake where I deposited. I accidentally. So you're supposed to deposit 0.02 BTC. I have between Phemex, I have 12 accounts. I have accounts on Bybit as well. I've spread out pretty much all over the place. But I deposited 0.2 BTC, and I tried to change it. Ended up having 0.28 BTC on this account for the initial deposit. Tried to fix it before it started to make it 0.02, which just makes it much easier because you have less market impact. Using high leverage with that still leaves you with a small position, so it's easy to get filled. It's easy to get not filled because you need priority still in the queue. So that's not going to change much. But in terms of market impact, I am trading now with 10 times leverage, which is making me have, at some point it's going to have 35 to 40,000 contract positions, which is a little bit different because I'm dealing with a little bit more slippage at that point. So, it is what it is. The account is up. I talked to them this morning. I didn't get to trade much yesterday, but I'm up 6%, or just over 6%. So I'm ranked I think 80 out of 2,500 people. But these competitions, they favor high leverage. So I have to go pretty degen pretty soon. Otherwise, you're just going to get left behind. I mean, it's nice to show, hey, I could grow the account 30, 40, 50%, but you're not going to even come close to winning. Right? It'd be good for the team. That's not something that's at this point in my career, it's not something that would be difficult at all. But not to write it off like it's not difficult or to take that for granted. But there's no chance you're going to catch up to these higher frequency approaches that have 200 plus teammates. They're throwing the entire book at the market in terms of strategy. Very small, just trying to see which one is an outlier, and then that's carrying the team. So we'll get to this page in a second. Maybe something will present itself during the live stream. For those that are members of Blockroots, you guys know that we trade during live streams from time to time. Okay, and that's that. Let's look at Bitcoin. Let's look at some other charts. Make sure I said hi to everybody. Give me 1 second. Actually, I'm going to walk to my my mini fridge, and I'm going to grab a water because this coffee has left me parched. So I will be back in 1 second. You will not even notice that I'm gone. Okay, what did I say? You didn't even notice I was gone, did you? All right, where's the video? Let's catch up. Sorry, I was a little bit I drink black coffee, which I love, but just leaves me a little Okay, so all right, cool. Let's take a look at BTC. You know, the story for me for the last few months, guys, and this is all pretty public at this point, has been just don't mess up the long. Don't forget where you sit within current market context and structure. Give some weight to what's taking place on the macro front, and don't screw it up. And I think that we're currently in that position. I think that obviously the market is a little bit more extended now than where it was in the past few periods in which I was saying that. You know, back here and back here, I was saying, hey, we're now at a major level. We have signs that sellers are getting offsides over here towards the tail end of this. I said to start getting long, or I'm not giving advice, but talking around 9,600 of, hey, this is clearly a long. You had aggressiveness to the downside that was becoming very obvious at this point. Market was just throwing all it had at the lows, and there was, for all of that work, there was really no progress, which is a sign of traders getting trapped. In that case, this was a very long consolidation, and you don't fade the break from that. And towards the end of this consolidation, there were a lot of people that were saying, oh, the volume is dropping off, the volume is dropping off. Volume is a meme. Okay, volume matters where it matters, and that means that if price is doing what it's been doing, it doesn't need to maintain a high level of volume. It could just kind of float on low volume. Sort of like, imagine a car that is you're driving on the highway and you're in a car, and do you have to keep it floored, right? No. If you drive a nice car at this point, you probably have eco mode, and it more or less has some sort of low energy mode that still keeps the momentum of the car moving, still keeps the car moving at the same pace, but for less effort. So that's the way volume works, guys. Volume is, so once you start establishing a range, I don't care what method you use to establish a range, whether it's based on first swing high, swing low, wicks, value area like we do. Once you establish that, the volume counts at the lows again and at the highs. That's where it counts, not in the center. So when you change the story, so this was your range, we're stuck within this consolidation for months. The only place that the volume counts is when you're going to change the story. And changing the story means going from the range to a trend. And if at that point you see an absence of volume, that's a bad sign. Or if you see that price contends with one of the extremes, a lot of volume is transacted, but we don't have much work or much movement by the candle, that's a sign of absorption. Okay, so no volume, lack of momentum at the extremes, that's a sign of that is a sign of exhaustion. And then if we have a big candle, let's say that we had this big candle and it was left with something more along the lines of, you know, we're looking at maybe something like this and then this with a lot of volume, okay, that would be an indication of absorption. Instead, we got a ton of volume through the level. At this point, what we talk about all the time is on Blockroots is buying those flags that occur on the low time frames. You're not going to get a big retest right away. The market is just getting too slippery. And you get people, you know, we have different names for them. Sometimes I call them assholes, that are immediately trying to bet against trend. When you clearly have these major trend market structure changing candles that are taking place, and everyone's just looking to, I don't know, to be the person who caught the top. It doesn't make any sense. There's way more asymmetry to the upside than there is to the downside. And in these conditions, shorts don't get rewarded the same way longs do. That's the way it is. The shorts have there is a completely different set of mechanics when it comes to bearish trends, bearish chop versus bullish trends and bullish movements. Bearish movements, you get a big dump if you weren't in it there, and you think you're going to get in late. It's really difficult to get anything that you're going to say that with proper risk management would be worth holding. Put it that way. If you look at a bearish trend and someone says they held it from the top, then that means that they didn't take anything off whenever price was coming back to them. They were just like letting it ride. It just shows excuse me, now I just drank too much water and on top of that coffee. Either way, so we didn't want to mess anything up, especially this first retest of that higher time frame level. No reason to mess that up. Got some ate some big waffles and I drank that coffee too fast. And give me one sec. So only now are we starting to see that the market is getting a little bit aggressive to the long side, which makes sense. Everyone wants upside exposure. People are going to be borrowing more to gain more. You're going to see more of that show up in the funding. We still have a negative value on OKX. We still have now we have a positive value in the coin margin perpetuals. I say with the USDT perpetuals, if you have a negative value on Bybit or on FTX, I don't know about FTX, but the USDT perpetuals on Bybit are less liquid than the coin margin ones, so it's going to be harder to keep those markets in line. So you might have a more frequent negative value in the USDT perps. But where we are right now, we're starting to see that the market is finally starting to show signs that longs are really chomping at the bit at every chance that they can. So we'll hopefully, oh shit, price just moved up. I see when I'm doing these live streams, I'm not even paying attention. Okay. Let's see. No, what's going on? Come on, connect with us. What the hell happened? Market data, futures. What'd they do? Just make this paywalled in the time that we started the freaking live stream? What kind of shit is this? Hold on a second. Alright. Bitcoin. I guess they did. Did they really just paywall this in the time that we took to, or is that just not loading? Okay, either way, we have a different indicator we could do to look at that. But what we're seeing towards the high, and right now you're actually seeing it. So you see this red line and these black lines. This is the BTC basis, or premium index and funding. Now the premium index is a derivative of basis, which is just, again, we've talked about this. When there is a premium, when the futures are trading at a premium, there is what's called a negative basis. It's called a positive basis in crypto, but in traditional markets it's called a negative basis. So what that means is that the spot is trading at a discount. And this shows that people are getting aggressive in terms of derivative exposure. There's more gunpowder, there's more leverage, there's higher notional values. At this point, they're throwing more at the long side. So with the premium index in this case going positive, it's just showing that we're seeing on the derivative exchanges that people are getting aggressively long. Now you could see this by just eyeballing it on the price difference, right? So, or through price difference alone. So Coinbase is trading at 214 and BitMEX is trading at 215 now. Negligible difference, but when you're seeing that there's like a $10, $15 difference, that is something that normally precedes trapped setups. It's another sort of form of what we look at when we're using footprints or CVD, and this is something that's available to everybody. So this indicator is the BitMEX funding and premium index. I like to look at a bunch of different exchanges now, obviously, but BitMEX is still actionable. Even though we had that big exodus, trust me, from an order flow trader, it is still actionable, and I think it is still superior. Who knows why that is? They probably still have some institutional presence that's more than happy to KYC there and doesn't feel the need to, doesn't find that there's any risk, right, in the foreseeable future, even with what's brewing on the legal front. So with regards to what we're seeing recently, I wish this goddamn thing would load. I guess it's just not going to. We're seeing that finally up here, there is a more positive funding is a bit more prevalent. We are starting to see that the spot market is not trading as aggressively as futures. So something like Coinbase will be trading, $5 to $10 below the futures at times at the high. So that's where we start paying attention to this, because at the high, that's where we're beginning to consolidate. So if you see that at a consolidation like this, after we've had a major run up, that even throughout this consolidation, there's this premium between the futures market and the spot market, that's showing us that, hey, people are still getting a little aggressive, but it's not on the spot side of things. It's on the derivative products. And these are the people that are using higher leverage. These are the people that are going to, be increasing the open interest. And ultimately, when price moves against them, their pain point, their closing out of their positions, which typically happens all at once as that unwinds, is going to lead to the market pulling back. And I don't think that it needs to be right here, but I think it is just a sign that traders are starting to get a little bit ahead of their skis. And we hadn't seen that down here. Instead of down here, we saw the opposite. We saw that spot was leading and there was a really strong spot presence. Now, this is going to bring us to an important point that every time that the market moves up like this, everyone gets so excited. I get excited too. I have a ton of exposure to BTC, but aside from that excitement, stepping back a notch, we have to remember that, hey, if we're just approaching this from Dow theory, or I don't care if you trade Elliott Wave, you're looking at what is setting up to be 3 very large moves, right? Either that, or the fact that right now we're approaching a previous high, which is, it's more or less, there's no trade memory up there whatsoever. It's really just a psychological point at this point in time. But you're approaching some of these major areas that you could see that someone is going to be trying to unload some supply, right? Because this trend right now, I just spoke with my hand outside of the screen, but you can't see that, I forgot. This trend right now, even if it resumes the path of the last trend, which if we look on Bitstamp, we just zoom out. I wish I could zoom out on my 50 or it's 49-inch screen. I would just pull this chart across and you'd see the entire thing. Even if we go all the way back here, so we'll put the weekly on. Okay, this is the entire price history. It's not just one straight move up, and that's the last thing you would want anyway. You don't want one straight move up to the all-time high. You know, I always say if you get a vertical move, either straight up or straight down, that's a move I'm willing to fade. We're more than likely going to be chopping our way up still, where you're going to have a big pullback at some point that really checks everybody, that gets everyone sort of, you know, pee in their pants, put it that way. And, you know, whether or not we're going to be approaching that right here or whether it's a little bit further up, the signs that we would be looking for are starting to show up, right? Just that aggressiveness on part of traders that are looking to capture extra exposure, not just from the spot market, but with, I guess, yeah, they just changed it literally while we were in here because it was working a second ago, but are looking to gain leveraged exposure, right? They're borrowing against their stack, and a lot of times they're using high leverage. So that's where we sit currently. There's really no resistances above where we're sitting that are significant from a supply standpoint. So let's get back to zooming out. Again, let's sort of look at what we were paying attention to not too long ago. Okay, which is the areas that were important to gain access above are not the high, are not the low, or through, excuse me, but were this value area high right here. Again, this is the volume profile, not much that took place up there, nothing that really took place here. So it's not that we have any significant structural resistance. At this point, you have your psychological resistances. So you have your lazy price points. So I say a lazy price point is like, you know, 15K, 14.5, 15.5, these large whole round numbers that are, you know, why do I call them lazy? I call them lazy because, you know, rather than someone typing in a specific price point for their stop or their entry at this point, they just type, it's easy for me to just go, okay, 10,000 contracts, rather than go, oh, I want to enter in at 10,285. You know, at this point, it's very easy to anchor to that number, and not only the ease of entry, but the ease of how that comes to just the first price that you think of. Do you, when you think of a large number, do you think of 5,276,853.62? No, you think large number, 100 million, large number, 500,000. You know, you anchor to these very easy numbers, and that's why we call them lazy price points. And what you see is that if you're looking at some type of tick chart, so if we were looking at, I took my ladder off, if we were looking at a tick chart and a ladder for that, so volume by tick, you would see that as you went up, so if we were looking at this margin and we focused on those very whole round numbers like 14K, 15K, 15.5, all these very obvious numbers that stand out, you would see that most volume is actually transacted right at those points. It spikes. It spikes because you're triggering stops at that point. And again, not that they're significant from a structural standpoint, but they're significant because other people use them, right? And this is a technically driven market, which makes technicals like that something that you cannot deny, which is my whole point when I say it doesn't matter what your opinion on someone's trading strategy is. If 9 out of 10 price action traders value the weekly levels, well, you better value it too, because that's the kind of selling pressure or buying pressure you're going to be coming in contact with when you're talking about the more dominant methods that are used in the market. So always, not to segue, but have a foundation in the basics, right? Be somewhat of a generalist before you get into being a specialist. So that being said, okay, there's not a whole lot above us. Now where we sit, before going to, because you can see my BitMEX chart, and there's a bunch of different levels on here, and you're probably thinking, what the hell are all these levels? The ones down below, not that relevant at this point, until they are again, right? So I'm not going to get rid of them. But I have the value area low and value area high of the structure. So this point and this point, just signifying that between these levels, 70% of the trading has taken place. Not ever paying attention to one specific price point, but seeing again where price has been distributed and where value has been, where value has been determined and distributed. And in this condition, it is worth paying attention to because these conditions are ranging conditions. So these conditions are more balanced, which makes a break from balance that much more significant. And I got these levels by just combining these. It's a composite. And why did I combine these to get these levels, which are right here and right here? Well, I combined these because, again, if you remember from the last stream, the market goes from a trending to ranging period, and the first thing that you start noticing is value overlap. So value area, followed by inside day, inside value, slight value migration, but came back again, back within the prior value. So you're seeing that now, if we're going to be reading a little bit more into this, we're starting to see that there is a slight drift up over time. That volume has been, the point of control has been higher, then a little bit lower, a little bit higher, been drifting up. Everything is drifting up over time, but in the general scheme of things, price has been confined to a pretty loose range. So I want to know where those specific points are, because that's where I'm going to be looking for those mean reverting opportunities. As I say, though, weighing in current context is very important. So at the umpteenth test of the high, is it much more likely that we're going to get that mean reversion back to the midpoint, such as back to the point of control, or back to fair value, or back to the low of the range? Well, at every test of the high in bullish conditions, you have to, at that point, weigh the possibility that it's going to break much more than you would, let's say, if the low is tested. So these are not, at the, let's say, 1, 2, third test, if I'm looking at this high and then this low next, I think that it's much more likely, if I was going to weigh these, from a probability standpoint, I would say there's a higher probability of the high breaking in this ranging condition or consolidation than the low breaking. Why? And it's because there's a prevailing trend, right? We have just come from a major movement. There's really no sign yet of any kind of major kickback by buyers. We didn't have, again, a sign that buyers really stepped in tremendously in this range whatsoever. Excuse me, sellers. We have a poor high up here. Not a very attractive high. We had another poor high here, not a very attractive high. We don't really have anything that looks like this that is extended above this range. So that is a selling tail, or you could call that a selling tail or excess, and that says that we walked into supply. And what it is, it's just 1/2 hour candle, right? It's one 30-minute rotation. Doesn't mean that we had to spend the entire 30 minutes there, right? It just means that at some point in the 30 minutes that price came up to this level. It might have left in 5 seconds, right? It might have left instantly and never returned back up to that high. But what it says to us, if we just go back to different examples of this, is that the market walked into a location, something like this. Okay, the market walked into a location, there were poor highs, cleaned up those highs, think of it as a stop run, because these poor highs were from a rollover. Okay, it walked into that location and it found sellers. So we haven't really found the other side of the market yet. And when I say other side of the market, I mean those higher time frame sellers, or that supply that we would be looking for. Now we do have that tail right here. So as I'm using that example, you're thinking, well, that is the example, right? It's sort of like one. But at this point, it's really just filling out this little pocket. I need to see that a tail like this clears the highs, right? So something, and you price action traders, you'd see this. This is your gun of the highs, tap of liquidity, and then you're always expecting that sort of reversal at that point. I think that the market has become a little privy to approaches, and we see a lot of this now, where you get the move up, get the move down, clear the low, and then it's like, all right, we're just back within the range again. At this point, I look for the long. I said why this occurs. It's usually because of OCO orders. You get breakout buyers up here. You get short stops. Price comes up here, takes the liquidity. As soon as those breakout buyers are hit, those OCO orders place stops in this location. So once price gets a little slippery to the downside, it's just like this is soap on the floor. I mean, there's that downside liquidity that suddenly is built into the structure through that OCO order being triggered automatically. So like once your market buy is hit, your OCO stop is placed as well. Okay, so it's immediately connected to that order, and just it builds in that sort of that trip mine that's right below you at that point. So where we currently sit though right now, we're slightly migrating upward. I do think that we have higher to go, but I'm not trying to look for any kind of increased long exposure as far as spot goes right now, or any swing positions. I think that areas of interest to me are going to be this 13.5 level, because that is a very obvious, easy number to anchor to. So that 13.5 level, and then we have the daily highest high going back to It's going back to what, 2018, 2019, from that 2019 rally. So I think that these levels are noteworthy. I think that as long as if we start gaining acceptance above here, so above this value area, I will look for the long, so a long scalp initially just above this high, and then look to maybe potentially get to, well, I'll save this for the end, so I should tell you how to apply that at the end. But aside from where we might pull back to, I think that everyone should be prepared for, where's my chart? Everyone should be prepared for a deep pullback. Bitcoin always surprises us, right? And for previous trends, I always say it's not supposed to be a line in the sand, right? Everyone was focused on this being, you know, we violated this high, we didn't leave this fast enough, and I talked about the fact that on the way up for those months, for over a year, it was very loose on the way up. It's an illiquid market, it was going to be loose on the way down. But that being said, there were certain areas that were lines in the sand for previous price points within this trend. So right here, so from these highs, you can see that we violated the previous structure somewhat. So we came into this area, violated somewhat. It's not like we had a clean, immediate response out of there. There's some awesome setups down there that we shared. But we pretty much maintained it, right? It was loose, but it was maintained. I would want to see that the same thing occurs on this daily time frame for the top side of this structure. So what I think is there is this gap that begins from around 12.6 down to 12.2. I could see the market wicking into this area. So let's go to the other chart because it's probably easier to see. So where is this gap from? Answer that first before taking that for granted. So the gap, SP, is single print. So that's where we have a little bit of gap that occurred in this breakup. So you have an area that was an imbalanced area. There's really no volume transacted there. A lot of times what you see is if the market breaks down, we'll wick into that area and then find support back above. That would be bullish, right? If we wick into this area, clean that up, find support back above something like 12,600, and then potentially maybe set up for the next move upward. If we get more acceptance to the downside, so if you see that the market breaks into this single print zone, let me show you how I got that so you guys can learn a little bit. So that single print zone is right here. See single prints? I say single because there's just one line of TPOs. Okay, market moved very quickly through that area. So if we do something like this, wick in, wick out, that's great. Okay, if we start trading into there, don't take any of these drawings for, don't take them seriously. It's not meant to be, exact. But if we start trading into this area and you don't see a response out of there, then I'll look lower. And lower for me means right down around 12.2 and 12K. So we're looking at, you have a naked point of control that we were hit on the way up. I should have taken this off. This is gone already. See, I should have, oh, this is on, no, it's not. Okay, I thought I didn't save the chart. Wow, I left old stuff on. I didn't save the chart with the new stuff only. But either way, so looking down here, you have your weekly levels. Again, lines that you should respect. Why is this not loading fast enough? Okay. Weekly levels, always good for a, I would say they're more often than not good for an initial response. Why is this taking a second to load? Okay. For a second, I'm thinking, did my internet go out again? Because they've been fucking up recently. Excuse my language. Here we go. Here's the levels. I want to get rid of the volume. I can't stand the volume on the chart. Sounds funny, right? Here's our weekly levels. So right around 11.9. Okay, so weekly level in terms of close. You don't want to see too much violation down there. We hadn't violated the previous one much at all. Again, we came into the area. We established a base there. You don't want to see too much violation there. If we violate 11.9, 12K area, and I always say area because it's never a line in the sand. It's never a line in the sand. It's always the levels that we talk about are areas where we know we're going to look to in advance for that response to occur. So we have these sort of places we know that, if we come and do business down there, that we're going to look for the signs that obviously there's strength or there's weakness, just to put it very simply. If we start losing 11.9, we start gaining acceptance through there, we're going to look back at this sort of, that is right around 11K area. And then from there, it's just down to the next level. So we're looking at 10K, which sounds kind of extreme. Hopefully we don't have to come to that point. But at this point, we are expecting that at some point there's going to be some violent pullback, and we should be prepared, or not be prepared for necessarily those levels exactly to hit, but have an idea of where we want to look, right? So I know in advance, all right, I'm not going to do business in sort of no man's land. I know what levels I could sort of anticipate might be revisited. If they don't get revisited, that's fine, right? But at least I have some sort of plan moving forward. And that's where we currently sit right now. There's not a whole lot to go off of. We did get that really nice close, but it's a, you know, it's where we're treating as support right now. This daily high is closed going back to 2019. So that's going back to that point right there. So treating that as support, which is very nice. I think that ultimately we do get another poke up. So if I was going to say, you know, what do I think is more likely? I think that this current structure and slight consolidation with somewhat upward drift ends up resulting in maybe a smaller little spike upward before we get a larger correction that maybe leads to a larger range being printed. So similar to, it's almost like you could see a similarity between what I would say is I would put money on occurring is for this expansion that is getting maybe progressively smaller until we get some sort of major correction to be the case, right? That it would be something like that again. And then maybe at that point we get a further pullback that gets a lot deeper than maybe everyone's comfortable, right? So you have 3 moves up like this, and then maybe the correction comes back to the 0.5. I don't want to worry anybody, but listen, you got to be prepared for that. If you're getting excited up here and you're buying spot up here, you have to just know what you're getting into. This is why I have my spot levels known well in advance, and I don't mess with them. And I don't overthink those positions. They're not levered at all, right? So they can move a lot more against me, and I still have a bag to hold, right? Whereas in a leveraged position, you don't have that degree of freedom. So what I think could happen is, let's say we get something like this. We pop up, and then we break down, and then maybe we form a range, and this is, again, more something that occurs along the lines of this. Okay, maybe we get a longer term range, and then maybe this range, you know, gives us a more obvious structure again to play the way that we've been playing the more previous ranges, or the previous ranges, excuse me, with very defined features. But hey, at this point, it's starting to show that the market is getting a little extended. I wish, you know, Skew didn't put up that paywall in the time that I was doing the video, because it would be really nice to show you, you know what, screw Skew. Skew sucks. So I've been talking with these guys for a while. I'm not logged in right now. Genesis is great. Oh, I got to put in my, they gave me access to this, but Greg and what's his name? I think it's Brendan, created an awesome platform. We could look at option Skew just to see how the market is very confident right now. This is, again, taking a second to load. So option Skew. So we're seeing the difference between the implied volatility of puts and calls at the 30 and 20 deltas. All right, so we're seeing that it's positive right now. What that is showing us is that the upside calls are being bid a little bit more, or that, excuse me, that the implied volatility is greater, it's richer, which could come from, I don't want to say it's being bid more, it could come from puts being sold more and suppressing implied volatility. But it is showing that the market is showing that it has more of an interest in upside exposure, right? So the skews begin to shift as you get further out, but more recently, in terms of short-term skew, upside exposure, upside convexity is favored. So yeah, we're approaching that, potentially that turning point. I don't want to get, I don't want anyone to get too confident up here and buy spot at the wrong spot. Okay, so anyone have any questions as far as pairs? Easy explanation, please. Please. Okay. All right, Phemex getting these tools. Okay, we're gonna go over that tool real quick, and then I'll take your requests. So just to mention the important levels again. So I think that this single prints level around 12.6, 12.5, we could see a wick into that. And if we gain a response out of there, a very quick response out of there, I'd be looking to long that. So even if we break this low right here, so even if we break this structure on the daily and we gain acceptance back within this gap, if we have an immediate response out of 12.6, 12.5, right, I'll look to long that back up towards this high and for a maybe a longer range to develop. In terms of our weekly levels, so if we just zoom out first, and we'll go to the high time frame. Weekly, monthly looks good, right? Monthly is, it takes such a long time to develop. You might get an immediate response there, but there's really no sense in paying attention to our daily closes within the monthly until the monthly close comes around, which is pretty close, but the monthly is hyper bullish either way. So as far as the weekly goes, our weekly levels are down at 11.9. And then we have the weekly high more recently of that last consolidation at around 11.5. So there's a good there's a good amount of confluence between that 12. This is right around 12.473. that single print level and this weekly high. So again, what would be nice is if you got that wick into that level and showed a strong response at that high. And what this means when I say these very simple things is, hey, if the market breaks down to 12.5, not worried, right? It's just, it's knowing beforehand why there's no reason to worry and sort of what the basis is for that reasoning. And that's just because that's an imbalanced area, and that's also the more recent weekly high, and price doesn't go straight up, and if price went straight up, it would be a problem. So right around, just think loosely around 12 and 11.9. So if we broke through 11.5 and we didn't get that immediate response, we're looking right around 12 and 11.9, and we'll deal with lower prices at that point if they come. But I think that we're going to be testing upward again. As far as the thing that I want to show you guys before we get into, let's see, Dow flashing red. So let me see. I haven't been paying attention because I've been talking so much. Yeah, you know, this whole stimulus nonsense is just getting a little bit overblown, and I think the market's getting tired of it. And I think at this point, there is likely to be a stimulus pass, but it's not going to be till after the election, obviously. And the market has been hostage to this, and the market has been knee-jerk responding to this for quite some time. I think now it's we're seeing more of a negative response than the upside response to talks of stimulus. So there's a negative response right now to the absence of any kind of agreement, any kind of solidarity, and I'm not worried about the ES, so I'm not really worried about it in the long term. And you've seen that ES and BTC correlation has somewhat broken down. That being said, as more institutional people come into the space, those are weaker hands that I think come in. So if you do have a major decline again in equity indices, Bitcoin is probably going to underperform to the downside, right? So Bitcoin is probably going to have a pretty violent sell-off as well, and that's because Bitcoin is kind of last in, first to go, because it is a more speculative product, and when it comes to deleveraging and prioritizing positions, long-term asset managers, hedge fund managers, they're probably going to prioritize their Amazon positions over their Bitcoin positions. Not to say, you know, just to give you a quick example. Okay. Comp means composite. So when you see that I have something labeled like this, all right, so this value area right here is actually, it should be comp. So comp value area high, comp value area low. And a composite is when we start to go from a trending period, which is value migration, so value area, this gray area, moving in one direction with conviction, when we start to go from that to a value overlap, so value within value within value, that shows that the market is no longer able to raise value, right? Where value is not being determined at a new level and buyers and sellers are in more or less agreement at one specific area. So a trending period is by definition, part of it is the market is not in agreement, right? It's imbalanced in one direction. So a composite is, instead of me saying, you know, when I'm looking at a TPO, so this is TPO right now, is very balanced. I'll look at this, tomorrow's day opens up, and I'm looking at my plays with respect to this TPO. Okay, we're coming off of a balanced day. We open up inside of this balanced structure. Let's say we close inside of there. I'll look for a break from balance from this structure. Okay, that's one thing that you could do. Now, this whole structure, though, is balanced. It's not necessarily each individual day is as balanced as this distribution, but over time, we've been confined. So what we'll do is form this into a composite. So we get a very nice visual representation of the distribution of prices throughout this range. So I see, oh, 70% of our time is focused in here. The point of control is right here. Most of the volume is transacted right here. Now I know where my extremes are to look for maybe those mean reverting plays and potentially the signs of acceptance through, either to the upside or the downside, or potentially signs of exhaustion or absorption at the lows for reversion. Okay, it just gives me it gives you a better understanding of context, right? Because I know that, you know, things are more balanced out than they were prior when they were trending. So the comp is just the composite from that. Okay. So as far as so I'll do the little tip at the end. As far as Link and Dot, Link has been highly correlated to BTC. I think the correlation's at like 0.72. Can't look at it on SKU right now because they paywalled us. But I think that Link is going to continue to outperform with Bitcoin. Now I picked up more spot link from around, I picked it up between 10 and 8, got down to almost 8.15, so I think my lowest order was at 8.30 something. But I think that link is going to continue to outperform, and my idea was very simple, that the structure that we had, which is, for those of you that are members of Blockroots, remember I talked, this exact structure was pretty much what I had in mind. So this sort of triangular consolidation that broke to the upside, it broke sooner than I anticipated. So it actually came back and gave us the structure that we were looking for. But I thought that this was going to ultimately be the break. So I leveraged. I put a swing position on this and was stopped out of it. But it was similar to the bottom we had saw prior. This one resulted more impulsively. This one is being checked a little bit sooner. But still, the first area that I was focusing on. So if we go to the, so this is your next weekly structure up here, but the first area that I was focusing on, and you have to consider this when you lose market structure on a high time frame, was this daily level. So contending with it, I said that if we flip this daily level, that we would probably more than likely be in a condition. So mind you, one of the things I always say is, I will say something like, if we flip this daily level and we're into this zone, there's a high probability that Bitcoin is showing strength as well. It's not doing this in isolation. At that point, this daily level from this previous consolidation, it is important as an area to manage the trade. As you can see, we came in contact with it and were rejected, but I'm more than likely going to anticipate this area is touched, that this area is going to be noisy, but because of current conditions showing strength, this resistance at this location is, it's not going to be as formidable than it would be if bearish conditions were right now starting to show, we were starting to see more evidence of bearish conditions maybe resuming. So this is just an area to focus on and to maybe manage the position. But for my spot positions, my line in the sand was right here. Now that we're accepted above, I think that we're going to come up to right around 15. I'll consider managing the trade at that point. It still looks good. It's still making progress, reclaiming previous levels, so previous daily levels, which is a really good sign. But again, this is all with the help of those tailwinds from ETH and BTC. ETH showing relative weakness. ETH showing relative weakness. It's been very simple for me with ETH for the last few weeks. It was this 390, 395 level. As soon as we gained acceptance above that to the upside, I was game on. Now, though, you can see that this is kind of drifting into that location again. It's not looking like it's showing the response Bitcoin is or Link is. If you look at an ETH BTC chart, it's showing relative weakness in those pairs, or rather in comparison to that pair. So ETH is, I said yesterday in the newsletter, ETH might be pricing in the ETH 2.0. It might have already priced it into this move. That's why we might have already gotten a really extended move in advance. ETH also, I don't even know what the hell that word was. ETH also is heavily tied to DeFi, which again was very overextended as well. DOT though, what did I say? DOT 450. I'm interested in DOT above 450. So DOT is looking awesome now. DOT, all the entire time that everything was underperforming and moving down, DOT had, you don't have to use an RSI to see the divergence in momentum. You don't have to use anything. Just look at the structure. Impulsive low, impulsive low, impulsive low, each one smaller than the next. So it's showing that it's rounding out into this low, each move up becoming more and more impulsive than the prior. So we're seeing a very obvious sign of strength. And if you go to just this weekly consolidation now that we've been stuck within, we've just broken out. It's a consolidation with a lot of wick, but we've clearly just made a very impulsive decision to move to the upside. I said this 450 location was important, not just that we reclaimed previous swing high, so not just that, but we're back above this 450 more. More. It is recent, but it is a previous high before this one. So I think that gives us a lot of sign that that gives us a very obvious sign that the market is, or DOT is very strong. And I think that DOT is going to continue to outperform with Bitcoin and ETH as the higher beta pair. If the macro pairs continue to move up, I think the DOT is probably, it's going to be top 5 and be one of the mainstays, or not the mainstays, one of the I don't think mainstay is the right word. I think mainstay is part of a boat. Or it might be a sailing term. I can't remember. I think that DOT is going to continue to outperform. All right. So what I want to go over, we've been in this for an hour, is the concept of using a trailing stop. So this is important because what I talked about with Bitcoin earlier, so trailing stop, there's a triggered trailing stop. That's what I want to talk about. So I could put on, let's just tag on a one contract position. Okay, tag on along. Okay, so now let's say that price has moved up against or and above a previous target that I had in mind. So let's say price is back above 3,360. I don't want to take the position off, but I don't want to, I don't want to cap the upside, but I want to have a stop on this. What I can do is, after price approaches or breaks through a certain point, I could put on a trailing stop. I could put on it by the trailing value that I want. Let's say that we're above 13,360. I want to put on a $20 trailing stop. I could put this on now and it's going to follow it by 20 bucks. So I'll put it on by 50 so you can see it. So now I have a trailing stop on. So this trailing stop right here, when price moves up, it's going to trail my entry by 50 bucks. As soon as price stops moving up and moves sideways or down, this is going to anchor wherever it last was. It's never going to move back down. It's always going to only move up. If price just kind of moved up monotonically and never moved down again, the trailing stop would go up forever with it. So the trailing stop is going to stay put when price stays put. If price starts dropping down again, the trailing stop is going to remain where it last was. It's going to allow you to get exited from that position after having moved up again further. So that's a regular trailing stop. Now, in conditions like this, again, remember what I said earlier on. If we were just looking at a range like this, so this is a range, it had come from a really impulsive move, major contextual move off of, let's say, monthly structure, big move to the upside, we're expecting trend continuation. I told you that I don't weigh these equally. This resistance or this support, I don't weigh this support and this resistance the same. I consider that after a major trend move like this, unless something is standing out that is incredibly obvious, like there's an incredible premium, with futures over spot. If we're seeing something that is very obvious at a sign there's a major rejection initially at this upside, I'm going to weigh or consider that the resistance is more likely to give in this structure just because I'm anticipating trend continuation. Let's say we put in a high, we put in a low, and then we're at the midpoint of this structure. I'm weighing this more heavily to the long side because this is probably a continuation pattern. Or it suits me to consider that because we've just made a major change in market structure and with respect to current context, things are very bullish. So if we're at let's say that we're at the midpoint of this structure, which is kind of a flat-footed area to get in position because you do have not a really nice area. You don't really have a great spot to define your risk. But let's say we've done something like this. All right, let's say we've done something like this and we're looking to be basing out, or it's looking like we're basing out now at this point in the center. We have two tests of the high. Maybe down here it's like we've had a very impulsive, or we've had a very, I'd say, let me redraw this. Let's say that at this low we've had a very strong sign even higher up than the previous low, and you're looking at maybe getting long here. Okay, not something I'd say, just get long off of a structure that you see like this alone, but let's say that you're looking to get long right there. Now, the next resistance is still in the same location. That is the same area that you would expect to act as a speed bump or act as a sticky point or friction, all the different ways that we could label this. But in these conditions, if this is the third or the fourth test of resistance, you're weighing that and considering that it's maybe more likely at this point it's the one that gives, right? It's the one that breaks. So do you want to put a take profit here at this location as just a static take profit? So meaning, do you want to use a limit order or a market order to get out of this trade right there? Or do you want to allow this the possibility of running? So what you can do is, let's say that you have a resistance, and the inverse works in a bearish trend as well. Although in bearish trends you don't often see that they get rewarded this way as obvious. Let's say that, I'll use this example. This is probably a good location to use one. So 13,920. Okay, it's the all-time high going back. It's the highest highs going back to 2019, the rally, right? It's a psychological level, but price could very well get very slippery through there. And I could put a take profit there and I'll be exited, but how many times have you put a take profit somewhere or exited out of a trade and it's gone on, $500, $200, just consider, any random number. How many times does that happen? You're thinking, shit, I was out of the trade. Like, I capped my upside so much. What you can do is you could put a triggered trailing stop. So what this does is I could put a trailing stop that will trail by, let's say, you know, we hit 13,920, and I think there might be an initial response. So maybe we'll get a $100 kickback. Maybe we're expecting some level of volatility. So I'll give it a $100 trailing value. The activation price will be at 13, let's say $13. 13, what was that? 900 and let's say 13,950. So let's say 13,950. So wow, that's 139,000. That's really wishful. So what this is going to do, you're going to see up here. Oh, it's not up there yet. Where'd it go? Okay, so it's not there yet, so it's not gonna poke on. But what this is going to do is after that level's hit, not sure why it's not rolling up right now. Let's see. Refresh this. Make sure that it is on because it just, I guess they don't show it on the chart. Either way, so what that's going to do is when price hits that level, say price hits that level, at that point it's going to place my trailing stop, which will be down here. And what that'll allow for is, hey, maybe it comes back down. Maybe it hits this and there's an immediate rejection. All right, I'm stopped out. Or let's say it comes up to this level. My trailing stop is hit, price gets slippery and starts moving up. Now my trailing stop is following price up by $100. In really strong conditions, you have to obviously weigh things in a Bayesian. I think you don't have to. I think you have to weigh things in sort of a Bayesian manner, which means that there's conditional probability, right? There is, you know, depending on current context, that probability might be increasing or decreasing. And I think that in strong market conditions, you know, if you have an equal amount of tests at the high and at the low, well, if the prevailing trend is really strong, well, what does it make sense to bet on? If you were just gun to the head moment, what would you bet on? Would you bet on a reversal? No, you more often than not, you should be betting on continuation if it's a continuation pattern that looks like it's forming, right? Unless there, like I said, unless there's any clear sign that there's been a major rejection, right? And on that same note, if there was a major rejection that we haven't revisited multiple times. So if we came up, let's say, something like this. So one of the things that I say to pay attention to is if we were rejected by this point, all right, at this point, it should do its job, right? Market was heavily rejected. This was the same idea going back to why I was very bullish back here. If the market was heavily rejected back here, there's no reason why we should gain acceptance back through that level, right? At that point, if the market was rejected there, that thing should have done its job. And now if we're just walking back up, it's bullish, right? Instead, if you just came once to the high and you were majorly rejected, then maybe at that point we're not putting our trailing stop on until there's been multiple tests, right? Until it's shown that we've gained acceptance back in that level, and that, you know, this is sort of the second or no, the third or the fourth time that we're testing it. So this is something that'll allow you to maybe capture a little bit more upside, a little bit more downside if you're using it in a bearish trend, rather than immediately capping yourself. Hopefully that finds some use on your end. Okay, so let's see. Your trailing stop, just one thing that you can use. Trailing stop, you can use something like ATR. So you're thinking, okay, well, what trailing value do I want to use? Because you know, I don't want to use an arbitrary value. What I'll use for trailing stops and what I'll use for some of my swing failure setups, plays at the highs and lows, is the 30-minute ATR, which is just your average sub-period range, which is, if we're looking at a TPO chart, so let me undo this. If we're looking at a TPO chart, this value right here, ASPR, it's average sub-period range. So for 30-minute candles, what is the average size of those candles? I use this for a host of different reasons. I know certain values that precede breakouts. I know when to start paying attention. When we're down in the 20s and 30s, I know that that is more than one standard deviation below the norm. The norm is around 55, 60. So the norm for our half-hour candle movement is around, I think it's around 62 now. So what I'll do is use this as a tool to implement with stops, with trailing stops, just because it's sort of you're incorporating the norms and price behavior to that. You have to, right? You have to consider what is sort of par for the course. You don't want to get stopped out from something that's expected. So people who place a stop that is closer than this value, yeah, it's ridiculous, right? Price is normally going to move that value, so why are you going to be placing a stop any closer? So the trailing stop, you could do the same thing, but with trailing stops, what I say to do, and you could find this indicator, you could go to, let's go to ATR. go to ATR, average true range, go to your 30-minute candle setting. You can see right now it's at 52. You can see the daily ATR too. So daily candle movement on average is 393. So this is good because when you have norms, I've gone over this before, you know what is normal and you know what stands out. If you get, so now you have an ATR of, let's say, 393. So talk about how to use this. You know that the current average days range is, it's been around, it's 393 for the last few periods, but before that it was around 3. If you get a candle that moves that value in 15 minutes, in a half an hour, that's worth paying attention to, right? Because that's a full day's ATR in a very low candle, or excuse me, a very short amount of time. It is a low candle, but that's a stupid way to say it. So with a trailing stop, you should integrate some form of ATR. So what that might mean is using a multiple of it. So if you're swing trading on the daily, if you're position trading, some people will use something like a stop of 2 times ATR. So your stop is, in this case, $600 away, right? $700 away sometimes. These are position trades, spot trades. So you could do that for these low time for momentum plays as well, but you'll use something at 30-minute ATR. Okay, so that's done. I think that's covered. I mean, we're an hour and 10 minutes into it. There's not a whole lot of alts. Like, there's nothing really that's standing out with regards to alts, guys. So I know you probably going to want to chart alts, and I'm telling you, I think that Wi-Fi is still, I've been talking about coming down to 4 digits. And look, it's working out perfectly. This level's been on the chart for some time now. I think Wi-Fi is coming down to 4 digits. I think Link still looks strong. ETH is showing relative weakness. DOT showing a lot of strength. DOT is definitely showing a lot of strength. The whole time while we're doing this, Bitcoin is on its way up again. The thing is, I wouldn't want to get overly exposed at this high, right? This is when everyone gets overly excited, but you shouldn't get overly exposed. And that kind of covers it, I think. I think that covers it. Traditional markets right now, bit of turbulence. One thing I just want to look at really quick. I shared this in the newsletter. Victoria's Secret. That's funny. I don't even think my wife's ever used this computer. So, and I don't think I've ever. Yeah, I have bought my things, wife. I bought my things from Victoria's. I just said I bought my things from Victoria's Secret. I've never bought anything for myself from Victoria's Secret, but I have bought a lot of stuff for my wife. So looking at VIX term structure, I shared this in the newsletter. VIX term structure, it is showing that volatility is anticipated into and after the election. People are anticipating a contested election. Markets are anticipating volatility. VIX is normally going to be between 15 and 20. So right now, into November, into December, we're looking at values of 29, 28. Remember, this is calculated by equity index options. So, look at this and you're kind of, if you're anticipating volatility in traditional markets, you have to be willing to accept that there might be some volatility with BTC as well. This is not necessarily predictive, right? This is what the options market has in mind for the future, but I think that you have seen that as of recently, the market has responded in a knee-jerk fashion to anything that's headline related. So there is headline risk. And while there has been some really nice positive movement with BTC as of the end of last week and how it's decoupled somewhat, that's great. But I think it's really important to distinguish short-term correlations, which are not spurious, which a lot of people say are spurious because they are actionable, from long-term, more consistent correlations. The long-term is that equities and BTC, there's sort of been this high beta play on equity index, on equity indices, more on the S&P, but you could say the DAC too. So that being said, short-term correlations, that's fine if we broke them, but I think that if, to put this plainly, if you see a major decline in the S&P, don't think that Bitcoin's going to suddenly be, it's going to suddenly change. Right? We saw what happened last time. Am I predicting a major decline? No, not at all. But my point is, always be prepared. So at these elevated prices, what are you doing to hedge? Are you taking anything off the table? Are you paying yourself? And if you do have a spot allocation, you shouldn't be trading it. Have a separate spot allocation. Uni, I know it's going to be dead in the water before we even look at it. So we'll look at Uni, but I know it's dead. Yeah, Uni's, this is a Uni Tether chart. It's not looking good, right? Our approach with alt is very simple. It's usually a weekly structure. So if you get a major structural point, inflection point within the weekly, if you had enough price history, we'd go by it. But we're going to reduce this to the daily. For me, it's still this 390 level that we need to overtake. And that's for higher time frame, bigger moves. That's the next resistance to where we currently are. If we do something like this, break this low, reclaim that low. So let's just set up some possibilities. Here's your more recent area within market structure. Let's say we get a nice swing below that and we're able to reclose above on the higher time frame. Then yeah, I'd probably be looking at maybe a play at least back towards the midpoint and then the high of this structure. So you're looking around 340. I don't want to say much more than that though, because then it's like as if we're talking as if this is so, let's just say, what's the term I want to use? Causal, in that if we just break this level, we're going to immediately go to the next. Again, conditions would have to change on the higher time frame with a lot of other pairs. Not a lot of other pairs, but this would imply that there's suddenly stronger conditions than actually exist right now for alts, I think, across the board, because you're seeing Bitcoin dominance go up. As far as uni, it doesn't look good right now. I need to see either this break and reclaim, because if we break below this and we maintain that level below, so let's say we close below this structure, you're just looking lower and lower. Really, there's no floor, and it makes it really ugly that this is your price history. Like I said, it's all perspective though, because if you go on one exchange, your price history is this. If you go on a new exchange, your price history might make it look something like this. So one might inspire you to be a little bit more bullish than the other. I know personally, if I see a structure like this, I start thinking, oh, maybe the bottom is coming closer. Versus a structure like this is why perspective matters, right? Versus a structure like this, which looks like a flag that's going to fail lower. You know, it looks like it's breaking down. So not that attractive. Okay. If I'm sitting on the sideline, my exposure, I don't know. If I like something long term, and so fundamentals, I think, always win out in the long term, and I think fundamentally, Bitcoin has a place in traditional market portfolios, or just portfolios in general, right? As not just an alternative asset, but as a hedge against inflation, as a higher beta play on equities. You could think of any narrative. I think it definitely has a space. So I think long-term price appreciation is something we're in store for. That means that if you want exposure, you could dollar cost average in, you could value average in. I can't give any specific instructions. The major points within market structure are where I focus on. If I'm going to say broadly speaking, I am personally looking for, if we pull back to this area, the signs of strength that would inspire me to get long, I would be looking for right around here. Right now, though, right? Because it's for one time frame. For my lower time frame trades, completely different criteria. AVAX is one of the ones I went over last week. Michael, that was the chart that I was just talking about that has two different price histories. But AVAX, the same thing, right? It's showing relative weakness to BTC. So only on the lower time frames are we starting to move up as of today. But I mean, on the higher time frame, this has a lot of work to do before it is looking attractive. So if we go to AVAX USDT, this is the chart that I was talking about where a second ago, the last time I charted it, I looked at this price history. It had one like this, one like this. At this point, if this was the structure, so let's find that other one. Maybe it was this. Nah. Either way, so this is a good chart to look at right here because it has the range that's more obvious. AVAX acceptance above 480, I would look to long, but at that point, this is kind of not doing much for me. It's moving probably because it's illiquid. You have a positive response, you get this little blip out of nowhere, but again, from the last video too, it's not, those levels are still the same. So that 480 level, right around 480, which is, if you go to this chart, it's the high. If you're willing to bear the risk, you could look at this more recent structure, which is acting as resistance. It's a good argument for that too. So this swing high right here around 450 came into that acting as resistance again. Let's say we flip that. All right, so maybe there's a little bit more reason to get bullish 30 cents earlier, but or it's more than 30 cents because this is a different chart. See, that's the point of looking at different charts. So maybe focus on lower time frames then. Maybe focus on this 450 level. Okay. Yeah, exactly. T. Ross. Vikram, it's dynamic, man. There's a lot of different things I look at. One is definitely strength and price action. So I always try to oversimplify structures. So under overs, right? So something like this, come down, test the low, break through, price makes progress, and then does something like this. Okay, it's just it's signifying that price has now traded back above a previous level that it had making sort of bearish headway within. So it was progressing down, took out a low, now we're reclaimed and trading higher. There's plenty of different patterns you can look at on the low time frames for strength and microstructure. So one of the more recent things that I shared is a pattern that you frequently see on BTC. So let's go back to, where is that? It was on the low time frames. Okay. Not sure what this was the other day, so I can't remember if it's not going to pop out now. But you're looking for a loss and then a reclaim. So at a low, let's say that, I like to look at a loss and a reclaim because it implies, well, that's an area that I look for trap traders. So if we get a spike and then a spike of that low and then we're reclaiming it, this is where I'll look down at lower time frames and look for the signs that there's some offside positioning into this low. And that's where I break out the footprint. I'll look at something. I'll look for, some sort of pocket where I'll have that low in mind. So let's say that this was the low right here. We break that low. I want to see that that low is broken with a lot of energy, that we have a big increase in volume. So you don't have that in this example right here. Bigger increase in volume, a lot of selling, and then now we're trading back above it. And now I have a case to be made, or there's substance behind a case to be made for that unwind in the opposite direction. There's a lot of different things you can look for, though. I suggest if you want to learn more about it, you join us over at Blockroots, or there's plenty of other great educational platforms as well. Bro, can you check CRV maybe? Sure, bro. 1 second. And then we're going to wrap it up, guys. CRV still looking like shit. Okay. CRV still looking crappy. Yeah, I get it. I know what it means when people, a lot of times when you guys are sharing charts, it's because you have an allocation to it. So more recently, CRV, this is on the low time frames, maybe going to show strength because we're going to be overtaking this most recent swing low. But still, this is the first day above that we're breaking it, which puts us, where's my price point? Price label, there we go. So looking at such an ugly chart. So above this area, you start building strength above this, maybe get some more relief, but there's no change on the higher time frame yet. These things are going to be moving down. So where Bitcoin is right now, everything is just going to get hurt more. So why is that? And then I'll wrap it up. Bitcoin dominance increasing. Okay, and Bitcoin is at a major, it's at a point where it could get very slippery to the upside. So move a lot further up, or move a lot, or at this point have a reasonable size correction. Don't think Bitcoin just moves sideways. So, and could move within a larger range, but everything is sort of at the whim of what Bitcoin is doing. If Bitcoin assumes one direction impulsively, alts are going to get hurt either way. All right, guys, that's a wrap. We're going to wrap it up right now. Thank you for joining. And yeah, until next time, we will do this again on Wednesday. That's that. Everyone have a fantastic evening.